The insurance market is greatly influenced by the reinsurance market. These are the companies that provide the capacity for insurers to accept risks. And for this reason, I have brought two phenomenal reinsurance brokers who will talk with us about the renewal season, the period for renewing these contracts, and what we should expect for the next 12-month cycle. Stephanie Fonseca, Deputy CEO at Carpenter, a professional with over 12 years of experience in the reinsurance market. Fábio Scatigno, Head of Surety at A&R, a professional with over 18 years of experience in the insurance and reinsurance market. Welcome to the Security Academy. Fábio, Stephanie, thank you for your participation. Let's start by talking about the challenging moment the world is facing in macroeconomics, geopolitics, and what are the implications of this? And the sentiment of the reinsurance market regarding the Brazilian surety insurance market.
Thank you, Carol. Thank you for the invitation. It's a great pleasure to be here with you, Fábio. I think starting a little from what you mentioned, taking a macro view, I think we came from a very soft, very long cycle in the reinsurance market as a whole. In 2017, we had Harvey, Irma, Maria totaling almost $160 billion in losses. Then there was COVID. Anyway, and none of this, it was possible to reverse this soft cycle. And where we saw this cycle reverse was around 2023 onwards, much more directed towards a supply shock. So we see inflation rising, interest rates rising, also then revaluation of assets. Looking at it from the reserve side, inflation, increasing the values at risk. So I think that was the key point where the market really saw this soft marketing cycle turn. When we look at this in the context of Brazil, we see today that reinsurers, due to a higher cost of capital, obviously, with interest rates here almost at 15%, while in other economies they are at lower levels, but we see that there is a much greater perception and sensitivity in risk allocation and risk appetite. I think we used to see a lot in the past, a group anyway, having capital that I will allocate to Brazil, non-cat, etc. Today we don't see that. We see it being much more selective, much more discerning in choosing where to invest their capital, where to invest their capacity.
I would like, first of all, to thank you for the invitation, Carol. I am very happy. Deca, also a great pleasure to be here with both of you. You are great references in this market, and for me, it is a huge pleasure to share in this podcast, in this opportunity, a bit of our vision. Just contributing a bit to what Deca very well brought up regarding the macroeconomic scenario, both global and Brazilian, I believe there is also a very relevant point we need to consider, which is the fluctuation of the exchange rate. Anyway, indirectly, and obviously from the perspective of reinsurers, it ends up impacting the allocation of capital for Brazilian contracts. Due to the fact that today there is a greater devaluation of the Brazilian economy and the Brazilian currency in relation to the dollar, this causes tendentially reinsurers to have a bit more capital to allocate within automatic reinsurance contracts in Brazil, in the Brazilian market. On the other hand, there are other external pressures that make this balance of allocation within Brazilian contracts not so broad or mild from the perspective of greater allocation. So obviously, we would like to have a greater appetite from reinsurers in the Brazilian market to increase their participation within these contracts. But this external pressure with the tariffs from the American government was in Europe also caused there is greater conservation, a greater conservatism in the allocation of this capital within Brazilian contracts. So I believe that here one thing compensates for the other. Unfortunately, we cannot really have today a soft market in terms of new capital, a great attractiveness for the Brazilian market, precisely because there is a much greater concentration than years ago, and also this pressure that brings a bit more concern from the reinsurance markets, which for the most part are abroad. This also makes them more concerned about capital allocation within Brazil.
Interesting. I think there are two interesting points that are worth discussing. I think Teka very well mentioned the effect of interest rates, inflation, from your point of view, of the comparison of attractiveness. The reinsurer wants to pay the capital. Their indicator is the return on equity, always looking from this perspective. And the increase in interest rates makes the opportunity cost exactly be put into perspective. So reinsurance contracts have to become more attractive to draw in this capital. Is the other, and the other is another. But another aspect that I find interesting is that then the surety insurance, because we could talk about this for any line of business, but the surety insurance, I think, has two aspects. First, when we have this effect on the economy, it not only influences how international markets establish their risk appetite, but also influences the results in the underlying market, in the primary market, which is being protected by automatic contracts and transferred to the reinsurers. So these factors also lead to potential changes in the loss ratio, which are anticipated in the primary contracts. And I think it would be interesting later for us to also understand how the reinsurer's perspective is in this regard, looking at this scenario and understanding the effect on primary markets. But before that, I wanted to zoom out and understand, perhaps convey to our audience a bit of the sentiment of international markets regarding Brazil. So the world is facing several challenges, and it is, Fábio very well pointed out with all the important changes, the problems in this. The tariff issues, markets closing. How, and also in geopolitics, the climate between nations is heated, and we could, even at the limit, reach an escalation of global tensions. And I would like to understand how this can affect the Brazilian market of surety insurance. That is, when the international reinsurer looks at the world and the allocation of its capital, they will say, in this scenario, Brazil benefits or is harmed by the global scenario.
I think that's a good point. Please no. I think that's a good point. I always tend to like seeing the glass half full, right? So when we look at this scale of global tension, all this scale of protectionism, this tariff, from Trump, I think Brazil, we are in a relatively privileged position, right? I think today, Brazil, we operate with a deficit of almost $30 billion against the United States. So for us, our position wasn't of a super tariff, and it was a 10% tariff. So we are not as affected today as, for example, the Mexican economy, which is also a huge market in the region.
Yeah, I think it's tied with Brazil as the top one surety insurance market in the region.
Exactly. So I see that Brazil, like the entire world, we are going to see a scenario of a lot of volatility. The exchange rate skyrockets one day, and the next day it drops. I think there will be moments of volatility. The good part is that we know how to deal with volatility. We are used to it, but I see Brazil in a relatively positive position. And we also, as stakeholders in this market, we communicate a lot. This also involves putting Brazil into perspective for the rest of the world. So I think at this point, the receiver also aligns. It acts on this positive view of Brazil. Obviously, we see escalations, we see tensions, we see volatility, risk aversion. It's clear that these are variables that also impact the capital allocation of insurers as a whole. But putting Brazil in perspective vis-a-vis other markets, emerging markets, markets in the region, I do see Brazil, yes, we see Brazil in a really very privileged position in this scenario.
I completely agree with you. I also have an optimistic view. Goodbye. Regarding Brazil, I see another quite relevant aspect that we need to take into consideration, which is the increase in competition within the Brazilian market. So as you have sanctions or difficulties in terms of exports from the United States to other countries like China, the tendency is that these imports will be directed to other countries. Brazil is a target country in terms of exports from China to here. I think this will end up boosting the economy in a positive way and bringing greater well-being to the population. Indirectly, it also ends up impacting our market, the primary surety insurance market. And here I know that the focus and our audience is very directed towards surety insurance, but we cannot fail to mention credit insurance, which also ends up having a quite significant impact. Regarding the concern of reinsurers' loss ratios in terms of capital allocation, also because this ends up worsening a bit the financial health of companies and in turn a higher probability of default. We see that reinsurers, usually the underwriters, look at both surety and credit. And this also ends up influencing their decision regarding a product when they base it on the market analysis of the Brazilian scenario as a whole. So indirectly, I think this also brings a different mood, balancing out our optimism here. I think it's important to mention that the reinsurers who are currently involved in credit contracts will probably have negative experiences, and this might also potentially have some influence on our surety market. Due to the fact that they have experienced losses because of these geopolitical movements and volatilities on a global level.
I quite agree. And I think that, in fact, the credit loss comes first. So it turns out that in surety, we see it has a longer tail. We see the result of this much later, some time later, and returning to the point you touched on. Carol, I think that regarding PMS, speed PMS, Larde Corp is always something that the receiver also looks at in the portfolios when analyzing. And obviously, with an interest rate of almost 15%, with high interest, high capital costs, the PMR has less breathing room, less financial robustness to withstand. They rise and find SIPSes to sustain themselves. Sectors that also operate with a higher level of leverage will also face more difficulties. So I think it imposes some difficulties, challenges to some sectors. And evidently, I think the PMI, we can indeed expect a bit more friction.
Perfect. Exactly.
In this scenario, then, if we were to objectively present to the insurers who are organizing themselves for their cycle and also for their renewal cycle, this scenario brings specific guidelines. It brings us as advisors of the insurance market and as scholars of the insurance market. Are there any particular points that you would like to recommend for insurers to pay attention to?
Our role as advisors, and here we are representing the reinsurance broker, regardless of which firm we are with. I think our role here is really to bring a bit of this vision of how we as brokers can help clients in obtaining contracts, capacities, and thus help the operation of that insurer to achieve good growth and sustainable growth. Above all, it is precisely to qualify the information, help them bring data and information that work in favor of that insurer today. Besides structuring contracts and analyzing historical loss data, for example, we also have a very big obligation to demonstrate to reinsurers a reliable interest in relation to underwriting, the technical team, underwriting policies, and credit policies. This means that in a combination of factors, that reinsurer has a higher probability of capital contribution. Within that contract, what we have seen, and now speaking a bit from our perspective, so it is a very big concern about the concentration of risk in some specific borrowers or in some industries which end up, due to their characteristics, by their nature, having a higher probability of utilization, especially of judicial guarantees, which today represent a large portion within our market. I would say that around 80% today are concentrated within judicial guarantees. And that demand this capacity greatly in relation to their processes, mainly tax related, labor related as well, civil certainly, but the tax related, I think, brings a greater concentration and a greater concern. Also, obviously, due to the characteristic of being a more liquid guarantee than the guarantees that are linked to projects. So there is a concern, besides their motivation in having Brazil as a target country compared to other Latin American countries being more interesting is also this concern of a greater concentration of capacity, which is something we have been warning about. Many of our clients, especially insurers, new ones, we see a market that is growing 20%, 25% annually. And the entry of new players into the Brazilian market in terms of insurers, this also causes a very large impact because it's an interesting business, but the capital ends up being concentrated in a few reinsurers. So our role, besides doing this work, this monitoring, this connection between the reinsurer and the insurer, is also to seek alternative reinsurance capacities. So we will probably address this here during our conversation. But I think here lies the great challenge for us, for our industry, to obtain additional capacity, especially for these companies with good financial robustness, which today have a capacity deficiency in the market.
I very much agree with what you said, Fábio. I also think that as a stakeholder in this market as well, part of our work is to be advisors to our clients, evidently also partners of the sellers. I think it's a moment when we have a high cost of capital, we end up, these are times when we see eventually that the underwriting policy might loosen up because the financial return can be high. So I think the discipline of underwriting is now fundamental. And another point, you well commented, our market is very driven by judicial matters. Again, judicial, there is an update depending on the indices. So you have to be super diligent in monitoring exposures. You can't neglect this. These are risks that eventually can come back to the insurer itself. So this diligence in monitoring exposures is also something we always try to support in the best possible way. And also bring the lessons learned that we sell in markets outside Brazil, within Brazil itself, and improve, right? And see how we can contribute so that past mistakes do not happen again, right? So I think these are points we also tend to closely monitor.
And comparing the loss ratio of our market in relation to other types of insurance, other modalities, we still see a loss ratio below average, right, in terms of surety insurance. So today, the market revolves around 20%, 25%. There are insurers that have levels even much lower than these. And this causes new players to become interested in this product, in this operation. And obviously, its profitability also ends up being a motivating factor for other companies or investment funds, investors, to have a greater interest in entering our segment than in other types of insurance.
That's as an insurer, right?
As an insurer?
Exactly. And I think at this point, one of the bottlenecks we see today, also, even for the entry of new players, you mentioned it perfectly. You open SUSEP, see the result, you take the combined ratio, wonderful, let's open a guarantee product. And one of the bottlenecks today is the capacity for reinsurance. So we talked a little about the soft market that existed, talked a bit about this reversal, a matter of supply shock. And today we really see the reinsurer's choice being more selective, more discerning. In the past, anyway, it was a BP, sometimes depleted. You could easily raise a few million, some hundreds of millions in capacity. Thus, the market is not like that. And there's no point in insisting. Obviously, we are aware of the risks. AAA, we know of borrowers with wonderful financial robustness. But we also know of the exhaustion of global capacity for these names. So I also think there is work for the market to increase this pie. We talk a lot about this. It's a cliche, but it's true. Sometimes the market would go after the same names, when there are so many companies, not just SMEs are, right? Still largely underserved by the guarantee product surety insurance, right? So I think there's a lot of market to grow. Why?
I would put this point in perspective because I always think about the underserved client. When we say there's a lack of capacity for some names, for some large companies, it means the company is bigger than the size of the market. And then it seems to me that as an industry, we should work to expand the market to meet the client's needs, because the client's needs won't change. If they are not served by the insurance market, they will turn to a bank guarantee, turn to another instrument, but they still need to continue insuring. And yeah. And then perhaps I would put this in the perspective of our work to seek a solution to address this growing capacity need. Yes, indeed, especially when we compare the large companies. And then one of the points I would mention here, and I think you mentioned it very well, is the concentration of the reinsurance market. Because when we talk about soft market, hard market, market cycles, when do we have significant concentration in the market? Reinsurer, especially in leadership, which is what moves the needle in placements and dictates the rules of the game of what will happen in that reinsurance contract. It also seems to me to be a very concentrated market from this perspective. And the importance of even for reducing volatility. And here I am talking about volatility because when you have a large concentration, the appetite of one player, 2, 3 players, it can drastically influence the available capacity for very relevant companies to the Brazilian economy. So how much could we not only work to expand the size of the primary market through reinsurance capacity, but also reduce the concentration in a few names, which could eventually put the necessary capacity for companies at risk due to the appetite of a few companies, of 1 or 2 reinsurers who decide to change their strategy in the region and predominantly impact the market.
On this point, Carol, I just wanted to try to bring another perspective as well. Contributing to what you said, which I find super interesting, is that it is a market with double-digit growth. About 10 years ago, 5 years, certainly 10 years maybe. And it is a market that demands this capital intensity, this need for capacity, because today we are mostly talking about judicial guarantees. And the judiciary, as well as in the scope of administrative, unfortunately still presents some challenges and opportunities for our market in terms of the volume of legal proceedings being discussed. Those still in the administrative sphere, but also those in the judicial sphere, which demand the surety bond policy to protect the interests of the state. If that weren't enough, we have this deficiency of capacity and concentration among a few players. We respect the relationships with these players. We know they are super relevant within our market and that we will continue to rely on them. But I think that if we can't have a diversification strategy over the next few years, it's in the long term, we will have a big problem, a serious problem. And then much of this demand for surety bonds, which today is already challenging in terms of these large player clients, I'm saying will end up migrating to other modalities. And then you will have a deflation, an emptying, of our surety bond market, causing all this capital not to be utilized, or if it is utilized, it ends up creating gaps of opportunities for others. For the financial market, for example, for banks. So it is a growing market, a market where there are probably 6 trillion legal processes still to be litigated. So this will ensure that we have legal processes over the coming years, certainly larger than what we see today, and that will demand more capital. But with this same pool that we have within the reinsurance market, it will not be possible to meet future demands. So it is up to us here to seek additional capacity from other sources. And this is the great challenge of the market currently. I wouldn't say it's just about the concentration of borrowers, because this is a theme in our discussions, but finding parameters and policies that can also serve companies of medium size, for example, small and medium, from the perspective of credit policy, credit acceptance. So it's not because a company today has a revenue of 1 billion reais that it is a worse company than another which has a revenue of 10 billion reais. You need to analyze the financial indicators and ensure that These indicators align with the credit policies of the reinsurers who are also investing capital in Brazil. So there must also be a greater awareness today in the reinsurance market to allocate capacity for small and medium-sized companies. I would say that the corp or the SME in general is not the focus of reinsurers today. They often set parameters that do not reach to provide the opportunity for companies of this size to issue surety bonds through insurers. So I also see this, if I could point out a challenge or something we could improve or evolve in our market, I think it would be this point, this aspect. I see many insurers interested in operating in this environment, and today, unfortunately, they cannot.
Are you referring to acting for smaller companies with judicial guarantees? Examples are the tax authorities.
Yes, I follow what you're saying. I also agree, a lot with what you brought up. But I also think that part of it, perhaps, is our mission to bring more capacity. I don't really like this, because we live in a market with a scarcity of supply and an excess of demand for 10 names, exactly. But there is a whole market that we can make attractive even for these 10 names that revolve in this dynamic that is underserved today anyway, in my view. I think it's much easier. You know that if you knock on the door of a borrower ABC, their judicial stock will be infinite, right? So your barrier there will basically be insurance capacity. It's more laborious to eventually develop platforms, access clients, others. And then I say to the industry as a whole, not to the reinsurer, not to the... Anyway, there's the insurance broker anyway. So I think we have to look at how we create attractiveness.
I think it's an excellent point, Teka, because indeed, perhaps the solution for increasing capacity is in offering and expanding the offer to smaller companies, because you improve the balance.
So
the balance I'm referring to here for the audience is the relationship between ceded capacity and ceded premium. So if you, within the structures of the contracts, manage to generate more premium for smaller companies by expanding the acceptance of judicial guarantees, for example, for smaller companies, you could...
A premium that is also good, this memory of the investment.
That meet the parameters, right? Indeed.
It's there, right? Yes.
But there are no static parameters of net operating revenue and net worth, but more sophisticated credit analysis parameters. Exactly, with almost 100%. And this can increase the volume of premium, including ceded, and then justify this balance and increase the reinsurer's interest. In this negotiation, you have more premium to cede. In the markets, in the borrowers where there is less concentration, and it facilitates a negotiation for the expansion of limits. I think it's interesting for us to talk today. We repeatedly talk about the scarcity of capacity, but if we look back, the market, the judicial guarantee market must be around a little more than 10 years old, and the growth in the size of contracts over these 10 years has been very severe. It was significant. Exactly. And the imbalance in reinsurance contracts as well, because you increased the cession and you didn't necessarily follow with the ceded premium in the same proportion. So perhaps to make it more attractive, the continuation of expanding this capacity might be to bring new premium to these takers who are there in the ranges of the lowest accumulations of Segura Luz.
That's exactly it. I think it's part of our mandate as a market agent is this, to create the tools. And that's what you pointed out well. You all pointed out well. We want to bring new premium diversification, not just within LAD, because sectoral as well. There are sectors that operate more leveraged, others less so. So really setting up, having a portfolio management vision. With the PME, is it interesting to issue a 5-year judicial fiscal? Well, maybe not. So if I also increase a bit of the participation of a traditional one, so it's this kind of diversification, this cushion that you will use in exchange for yourself to bargain, eventually, for a greater capacity for something that is already exhausted. So I think it's this portfolio packaging that requires having this vision. I very much agree with what you brought up.
But when you look at the reinsurance market, what is their perspective? Because I imagine the insurer is interested in accepting, of course, according to the underwriting guidelines of judicial for smaller companies. But here, the determining factor is the interest of the reinsurance market, the appetite of the reinsurance market. In the conversations you have with international markets that participate in Brazil, is there an appetite to enter the judicial guarantees market for smaller companies?
I think judicial fiscal, 5 years with mandatory renewal for small companies, is challenging. We have seen what has already happened with large companies. So it's appetite for this particularly, I don't see. I don't see a big appetite for judicial fiscal 5-year term innovation coverage for a small company. But I see a lot of appetite in the market. Reinsurer, local, international, for issuances, obviously depending on which modalities, but for issuances for small and medium-sized borrowers, very, very much. The market wants to see this pie grow. The market wants to see this horizontal plurality of risks. Instead of just seeing this vertical growth in a few names. So in this regard, I see a lot of appetite.
But the traditional guarantees, at least in my perception, companies are well supported. Of course, more and more new entrants are coming into this. It was a very concentrated market with few insurers that had, because to meet the demand of smaller companies and guarantees with lower values, you need to have a system. There are other requirements for the operation. And if you look back 10 years ago, maybe 1, 2, so if you forget, maybe 2, maybe 2, maybe 2, maybe 3 insurers had the tools to address this market. This has been growing. I believe that today, at least, almost 10 insurers operate in this market. Let's call it retail. It's about for traditional guarantees. And insurance penetration can always increase. I think it always can. But we are on a journey in that direction. So the number of insurers, and then the number of insurers, I consider it a KPI here, because you have different risk acceptance policies among them. So the greater the number of insurers offering primary market capacity, the more clients you can serve who might not have been within the risk appetite of one insurer, but might be within the risk appetite of another. And it's a growth trend that we have been observing. I think that more and more. In the last 6 months, perhaps 2 new insurers have entered this market, and it is growing. But what I question is whether the premium of traditional retail guarantees, will they cope, as these are premiums mostly retained by insurers, will they cope with this capacity expansion for the same markets? So perhaps for the capacity expansion, we would have to resort to new reinsurance markets and not rebalance the contract's balance. Because I don't know if it will cope, or an increase.
It's a much smaller market from the perspective of the base of premium and insured importance than judicial guarantees. So it's difficult to compare and put them in the same perspective. But what I have seen, and here I very much agree with what Teka said, regarding the popularization and plurality, you use that very cool word. And it's very much in relation to judicial and traditional ones. What is the balance between the two modalities? So we have meetings with insurers and reinsurers. They tend to have a better perception of insurers that have the relationship between judicial and traditional closer to balance. I would say 50% to 50%. 50% judicial and 50% traditional. And today, in the high growth market of current exposure guarantees. That's it. Regarding premium, I think it's also the guideline. It's an analysis that is done, but I am specifically talking about exposure. Because today you see a much greater concentration within judicial guarantees than in traditional ones. And sometimes it's not the insurer's intention to operate only with judicial ones. Sometimes it's a market issue, as we were discussing here. It's a market very conducive to judicial guarantees. Gone are the days when surety insurance the traditional used to determine some of the market rules and trends.
I think we are at an inflection point again.
Exactly.
It accelerated. With Operation Car Wash, I think all the infrastructure projects were put on hold. But now we have the new bidding law, the resumption clause, and the incentives and investments in infrastructure are heating up again. I usually say that I think the surety insurance market in Brazil has never experienced this because it was a market that 20 years ago was 100% and infrastructure and traditional guarantees. And well, 100% was a large majority, a large concentration of public insured. 2012, 2014, I'm speaking off the top of my head, maybe I'm not being precise with the dates, but the tax enforcement law, 477 CPC, all of this favored the environment for the emergence of judicial guarantees. And now, perhaps for the first time, we will see both things coexisting. Traditional infrastructure guarantees along with judicial guarantees.
Judicial ones already existed before 2014.
The first could be issued in 1998, but without significance in the contract, in the market.
But it gained significance in 2014, which was when the legal equalization of the modalities occurred, accepted by the judiciary. And this ends up making the understanding regarding judicial guarantees of this exponential growth about 10 years ago. And we are now entering a cycle of innovations, the second cycle of innovations. Thank you. And also a greater concern from insurers regarding this new cycle because, we take and analyze the low average duration of final judgment. The duration of a fiscal judicial process is around 8 years, 10 years.
We are all indeed.
14 then.
The justice in numbers, 14 years.
I had approximately 10 years there as a reference.
It's been a while since I checked, but around that.
But it's a process that hasn't fully matured yet. And we are still experiencing this product maturation process over these years. There is also this concern from reinsurers regarding the lifespan of the product itself.
I agree. I also think and agree a lot with what you mentioned. I also think that we already have 2014, so 10 years. There were cycles considering having a maximum of 5 average contract. We have already gone through some cycles of judicial renewals, and we saw moments when the market was tested. I think that back then, there was a lot of insecurity with the judicial aspect. When you mentioned the judicial aspect of the insurance market, it was like a curse word. And if the European market doesn't exist, index insurance is legal. What is the system? What does it mean for a process to last, as you mentioned, just Brazil, to last on average 14 years? Yes, I understand that. Explaining this jabuticaba is not easy, it's not trivial. So when we look at this, we also see that these cycles have passed the market. We had this mess, we had compensations. It's important to mention this about the judicial aspect. Significant compensations. So I think it was important for the market for us to test as well. Both from the perspective of the reinsurance buyer, testing the agility of recoveries. We know it has to be salary, the judicial recoveries. So these were important tests for the market, which I think also brought credibility to the product. So I also really like to see the positive side of our industry. I think the industry has dispelled a lot of that mystique, negative judicial quotes. And I also agree with what you brought up. I think we are perhaps for the first time coexisting in a slightly more harmonious balance, the traditional with the judicial. I think it's a moment we are experiencing. Before it was like this, 90% judicial. Nowadays, you already see many contracts much more balanced. Not only in that, but also with a larger SME, a large glass ceiling as well. And I think that's it too, what we talked about before, bringing attractiveness. I think you mentioned 2 new insurers. In the past, we talked about this not long ago, but you have a new insurer with PPT and you have a capacity. Yes. Today, there is an insurer where you need to have a differential. You really need to have a business plan that is compelling so that you are truly able to garner the capacity and support of the reinsurance market.
I also see a great deal of confidence in the insurer's technical team.
Yes.
The underwriters, they usually know all the heads of operation and surety insurance. And then in our market, I think it might be a characteristic of the Brazilian market. There is a significant change of companies, that famous game of musical chairs. This also brings a great deal of concern and reservations regarding the approval of new lines or entries into startups, for example. Because have you seen the use of Kim?
And clause? A little. Well, a little. I think there was more in the past. I think very little. I think the companies, I agree. Yes. I think the companies they have really gained a very significant corporate weight. There are still many firms associated with one person. Obviously, yes. Of course, there's the figure of the heady, a figure that carries a lot of weight. But we see companies with very strong cultures, to Fábio Bono to Fábio Multiliner. So then, today, very little of what we've already seen. Another time, sorry.
Just that.
Perfect.
And see that, like, the Brazilian market has grown. Today, the Brazilian market is top. It's among the top 50 insurers in the world. And I think we also have to be complementary to our market, because what kind of feedback do we receive about the quality of informational packages in the Brazilian market vis-a-vis? Well, you can speak better about this than we can, right? Ha ha ha. But vis-a-vis other regions, other territories, more developed, less developed. So like the transparency, the quality, the granularity of information. So I think the industry as a whole has kept up. It has also done justice to the growth of this market, right? So I think this point is perfect. It's a point we should tip our hats to all the stakeholders.
Certainly. No. I think there are two important points here. Really, the corporate weight, the much more mature companies, much less dependent, yes, of course, the human factor, the team is super relevant and will always be part of the underwriting process. But I think this relates to all the points we are discussing. The buzzwords now are processes, control, the systematics, it's the governance, the diligence, and not just talking about reinsurer market appetite and underwriting analysis, but how is this being reinforced in what I would also like to discuss with you, which is the new legal framework for insurance. And I also see this as a very strong characteristic in the new PGFN ordinance, which came into effect now in March. How the buzzword is of the two. Of these two elements, in my view, processes, control, diligence, governance, which is of course operationalized through the team and the people, but how it becomes key in the reinsurer's underwriting process, and how it also reflects on the primary market. So I would like to hear from you the sentiment of the reinsurance market. I think we talked a little about Brazil within the macroeconomic and geopolitical scenario, which in general terms, I think we agree that it benefits from having a lot of experience in working in adverse, volatile scenarios. Companies in general also with a well-developed strength to face challenges. So I think we bring this experience to deal with it. In this scenario of uncertainties, we have positive factors. A strategic position in this scenario, and this as can be a positive point for Brazil's economy, to favor the risk appetite of reinsurers in capital allocation. In the Brazilian insurance market, and now an additional point is the legal framework and the changes that will come into effect in December this year. And they will pass it to IESUSEP and put it up for public consultation in the second half, the resolutions that will regulate the legislation that comes into effect. And I wanted you, who are always in contact with the reinsurance market, to share a little with us. What is the market's temperature? Reinsurance is putting all this scenario in perspective, both macroeconomic, geopolitical, and now talking about this legal and regulatory environment in Brazil. How are the changes being viewed? The questions, in short, how is this reflecting in the interaction with the insurers, between the insurers and reinsurers.
I think that's an excellent point, Carol. We have indeed seen changes. They always generate uncertainties, always make people more anxious. So there is no meeting we attend with the reinsurer, whether local, international, admitted, occasional, in short, active market leader follower, where this question isn't asked. So I think it's an excellent point. And regarding, I think, the main focus.
Sorry to interrupt you, Teka. I think this is extremely important because I hear a lot from the market as if the reinsurance market wasn't keeping up, wasn't aware. And the perspective you bring is different from that. They are keeping up, they are aware, and they are already, in fact, asking questions and seeking to interact with surpluses about how they are preparing to organize themselves.
Absolutely. I would say that out of every 10 meetings, at least 9, the markets ask what the measures are, what you are doing. A very strong focus on the claims handling part, evidently. I think that's where the biggest adjustments will have to be made. But like all the players we work closely with, and again, with a local office, without a local office, registered players with or without leadership spectrum, all are very aware of what is happening. And then going back to your point, I think we see like there are many uncertainties. I think there's a lot. There will be a task, a large, important, robust task to be done by insurers to adapt to the requirements, especially the speed of the new deadlines. I think this is the main point. The claims areas will have to be processes reviewed, claims areas revised, legal departments as well. So I think there's a lot that will need to be adjusted. But the entire reinsurance market is closely monitoring this very closely and wanting to understand, wanting to participate, wanting to support in whatever way possible, so that the insurer can also feel supported by the reinsurance partners with the proper support in this change.
And if we could comment on the claims cooperation and claims control clauses, are they relevant for the participation of reinsurance markets in automatic contracts? Are they determining factors? Is this being discussed? Are they being discussed or reviewed? Are these deadlines being aligned between the deadlines brought by the legal framework? Exactly. There's still water to flow under this bridge to understand if there will be any prerogative for.
I think there's also an interesting dynamic that the new law doesn't mention, which is the fact that surety insurance is a product different from any other product in the insurance market. So the law does not establish today a specific characterization within our product that it is unique and different from any other modality. So this brings a concern, especially regarding those 2 clauses you mentioned. The reinsurer being there, monitoring each claim, having reporters, and obviously needing to be informed and participating in the negotiations during the regulation process, ends up bringing a concern from the operational standpoint as well. So they do not currently have the capacity to monitor item by item during a year of the reinsurance contract's validity. This is a real concern. But I think, as you mentioned, there is still a lot that is going to happen. We need to have specific regulation for surety insurance or something much more targeted than what we have today. If we take into consideration some conditions that are provided there, it could make many things unfeasible within our market. I think that today we are recording the podcast at a time of great uncertainty. The law has not yet come into effect. There is still this time frame. The regulation is in the works. And I think there are opportunities for both the regulatory body and the insurers to try to adjust this new law so that it has greater adherence within the Brazilian surety insurance market. Because today we analyze a clause from the perspective of surety insurance, but often it was not directed towards surety insurance. And we end up making decisions or having views from our perspective. And this can cause a nearsighted view regarding the applicability of the law on the surety insurance product. And then also addressing the fact that reinsurers are now more active and wanting to better understand the new law, the impacts within the insurer's operations. We have been having requests for specific discussions on this topic with the insurer bringing in the entire legal team, the reinsurance team, the underwriting team. Often the reinsurers know more deeply the impacts that the new law can have within the insurer's operation. And I see this as a very positive domino effect because it will create a positive challenge within the insurer's operation so that these operations are much more aligned with the deadlines, responsibilities, and guidelines being introduced there.
I think that speaking a little about the reinsurer's underwriting, the main element before any guideline, before looking at the risks that will enter that contract, before any contractual condition, the reinsurer underwrites the insurer. So the insurer that conveys credibility in the work being done to comply with the new laws that are at the forefront, showing adaptation in processes, and all the nuances will certainly benefit compared to others that are less prepared. So the reinsurer's underwriting always takes into account the company's underwriting and not just the line of business. That's why these meetings are so important, right? And how important it is for the insurer to prepare for these meetings, because there it becomes part of the contract renewal process. It has already begun. In these meetings, it is already being, of course, many things can be built with 4, 6, or 8 hands, right? But 70% of the meeting. Also, more questions to understand how the insurer has prepared or is preparing for this new scenario.
Undoubtedly. And I think for us who want to see the industry's success, for us, it's also interesting the question of whether or not to start from the reinsurer, even though it has come from the reinsurer, which is very good. But for us, it's always interesting to reduce information asymmetry, because in the end, what we want is for the industry to function. We want the rightful claim to be paid. And for that, we need a chain that has access to information, that knows how it works, the deadlines. So I think that's also what our podcast is for that as well. But it's almost our role to reduce this information asymmetry. We can bring to the reinsurers, to the international players, what the challenges are, what the support points are, where to look more, they can also add value to the clients, to the insurers here. So I think all this exchange and being this catalyst of information, I also think it's our role as market entities.
I think your point about reducing information asymmetry, the importance of the reinsurer, is excellent, and it makes me very happy. When you bring the information that the reinsurance market is initiating these conversations, so it is embedded within the regulatory and legislative environment of Brazil. It makes me very happy. I think this really echoes at the end when it comes to the claim settlement. And I also, them from the point of view of underwriting and business acceptance, the insurer's openness as well, to present this clearly, the importance of the stance and the conduct of the insurer's business during this process. So opening the doors to the reinsurer, being able to see how it is preparing, is also critical and a game changer, I think, in this relationship of partnership with the reinsurer. So regarding this, I think the feeling is that they are focused on it. If I could sum it up in one word, they are aware, they are focused. Claims, cooperation, claims, control are used, are topics of conversation and are part of this material. Understudy is becoming part of the reinsurer's underwriting. Seeing how insurers are preparing to deal with this new scenario. Exactly, looking at the company in a 360-degree way. And the insurers are also positioning themselves in a very open, collaborative way to show how they have been preparing for this challenge.
Including hiring law firms to support them in this process of maturation. So it's important to remember that as well.
Yes, thank you. So I think that regarding market appetite, this is not being a pointer of market appetite. The markets maintain their appetite despite the legal framework. So I think they are positioning themselves much more, rolling up their sleeves and working together to understand what needs to be adapted.
And subscribe as a receiver. Subscribe accordingly.
The conversation always has these two perspectives. On one hand, he is underwriting the insurer. On the other hand, he is also collaborating and contributing to the insurers. And he intends to support so that the final solution is compliant, both to what he needs to be comfortable with the risk and to be compliant with the norms and legislation.
Our perception regarding this is that from the reinsurer's perspective, it is something positive. So you have a standardization of processes, flows, and clearly defined responsibilities between the insurer, reinsurer, policyholder, and insured. So I think this is a very important moment in the Brazilian market because it brings greater legal security to the process of regulating any claim or also in issuance and underwriting, making reinsurers, contrary to what we imagined, have a greater appetite in and interest in thoroughly understanding this law.
So no reinsurer has raised their hand and said, I'm leaving because of this law. I think the behavior is completely different from that. This is excellent news. And it is very positive. This whole process of construction and evaluation, I think it greatly contributes to the maturation of operations. And it's a bit of what we were talking about. Insurers are becoming less dependent on key persons, on key people, and much more on actions that are much more evaluated, actions that are much more being evaluated. How corporations are structured for risk underwriting and for all the governance associated after acceptance. And then in this sense, in this legal environment, what would be, maybe I'll take a step back and put the three challenges we have today, then the macroeconomic environment, how it reverberates in the microeconomic, the geopolitical scenario, and the legal environment. These first two perspectives on a global scale, and the second perspective, the legal environment in Brazil, with a new legal framework. What I would ask in a very objective way, what would you, as advisors, suggest to insurers as points of attention and advice, truly advice, for insurers to pay attention to in this upcoming renewal cycle?
I think here, I'll take this question right here. My two main points are credit policy and underwriting policy. Why am I selecting these 2 points? Because I believe that much of the reinsurer's analysis always focuses and ultimately falls on these two aspects. So what we have seen within insurance operations is a great concern in meeting the requirements from a credit standpoint. And then not only net worth revenue, but also financial indicators, positive cash flow, and some other issues related to the industry of that particular company. So the comparison of, for example, leverage ratio between one company and another in the same segment ends up making reinsurers have a more positive view regarding the underwriting policy, regarding that particular company. Regarding the underwriting policy, I also see it as highly relevant policy, clear. The underwriting of risks within the appropriate modality. Unfortunately, there are situations, and we know these are not things that happen intentionally, but often some modalities and supports are issued within modalities that do not correspond to the risk being covered. And this, the new law even establishes as something of significant concern, which can even lead to loss of indemnity, loss of coverage, if a certain risk is included in a modality where it should not be covered, for example. I see these as the two main points. In the end, reinsurers always look at and want to deeply understand the policies, both credit and gain underwriting, in order to provide this capital and give the insurer the opportunity to operate with the reinsurer's capital as long as they adhere to these policies. And often reinsurers also contribute to that underwriting policy in terms of credit by providing greater comfort and security for them. I would highlight these 2 points as key points for reflection.
I completely agree. I think that the part about transparency and access to information are 2 key points. We have to remember that the receivers also suffer with our problems from the insurers as well. They also have to manage their own accumulations, and they need accumulation reports to create their aggregates. So I think this part about transparency throughout the process, adaptation to the new law, internal adaptation, investments in systems, and access to information, I think these are points that only serve to enrich the relationship, the exchange between the insurer and the reinsurer. It's what we always try to ensure a lot so that this exchange is very fluid. I think the broker is not there to be an obstacle. We are there to be a catalyst for this exchange. So I think that's a bit of where we stand out.
Excellent. So if I may contribute with this advice, I would say from the perspective of macroeconomic challenges, I would mainly point out, I think this only enhances a risk that I see in the insurance market, which is the large concentration in a few players, especially in leadership, but also regarding the share, the relevance of these players' share. It's not in insurers on an individual basis. So I would say that in the scenario we face macroeconomically, I would highlight it as a point of attention. And perhaps a recommendation on considering the possibility of greater risk diversification among reinsurers of different nationalities. SRI, 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 SI. I bring different nationalities, including here, with the potential escalation of global tensions, the possibility of issues with sanctions that countries may face. And that eventually reinsurers and entities linked to these nations may be prohibited from ultimately making indemnifications that in this case are due. So special attention to the sanctions clause, attention to the nationality of the reinsurance panel, attention to the maximum diversification of reinsurers in the panel, reduction of concentrations as much as possible. Regarding the new legal framework, perhaps I would bring as a provocation, hey, to do a transparent job, as you have already mentioned, showing all the diligence, showing all the homework that is being done, all the answers. No one has them, but here it's about showing the guidance. Here we are saying that the key words are process, diligence, and governance. And it's about showing how companies are organizing themselves to do this. And working together 4, 6, 8 hands on the topics of claims, cooperation, claims control, and other important clauses. But I would also bring here a reflection, a special look at, in scenarios of uncertainty, it's important that we look at follow the fortunes, follow the settlements, echo and expel, extra contractual obligations, excess of policy limits, which are important clauses, for us to have a careful look. I think building this trust in how the company is preparing, but also walking hand in hand. Exactly. Because it's an environment of uncertainty, and it's important for the market, not just for the insurers, but it's important for the market that there isn't this disconnect between the reinsurance market and the insurance market. So those would be the contributions. And to close this conversation, which I would love to continue here for much longer, with 2 incredible people whom I admire greatly, I would like to talk a little about that issue we mentioned at the beginning. All right, so there is an unaddressed market. What could we say about alternatives, alternative solutions for risk transfer? The ILS, I think the instrument has already been created. It must be what? 5 years, I'm speaking off the top of my head, but around that.
No.
Catastrophic market, cat bonds, no. I'm talking here about when they created the specific regulation for us to work, the receipt of specific proposals, insurer, etc.
These SSPS were created now this year, if I'm not mistaken.
That's the legislation. The legislation, so that it could be established, I think it must be around that. I might be wrong here, but it must be about 5 years. And the Constitution, more recently, we've seen companies now opening special purpose vehicles. So I would highlight here as the ILS as being a point, if you have been talking about this, if you have been participating in this discussion, your view on the adherence of ILS for the surety insurance market. I would like to hear a little from you.
I think this needs to be succinct here. I think it's a market we mentioned here, created 20, 25 years ago. Nowadays, it should become part of the alternative risk transfer. Speaking of ILS, it should be around $100 billion or a bit more. So I think it is indeed a growth frontier that we need to talk about, and we talk about it a lot. I think it has its challenges, right? It starts as something entirely uncorrelated with the market because, well, for those who don't know anyway, for the audience, the ILS, these are the insured linked securities, which essentially bring the financial market closer to the insurance market. So one of the purposes of its creation was to bring an asset not correlated with the financial market.
It's the nature of the catastrophic market. You bring an economic factor, it is climatic. And then you have this dissociation, the reinsurer's appetite for diversification.
Perfectly. And it's a market that reintegrates every year, right? You either have or don't have this start short tail, right? Then you raise, right? Next year, more than $120, $150 billion of markets. Anyway, in ILS, the guarantee it slightly bumps into this correlation. So I think this brings a particular challenge. Again, it doesn't mean it's not a frontier to be worked on. Without a doubt, it is. I think today, the alternative risk transfer market is growing much more than the traditional receivables market. It must be almost $500 billion. This market was created 20, 25 years ago, as we used to say, in the United States. It has been growing exponentially, so it is indeed something we have to look at, undoubtedly. The question will be how to work on it, the way for us to manage, package, and address some challenges. One of them is related to the financial market. This is a point that could slightly reduce the appetite. Another is the issue of the tail, also the lack of predictability. How do we frame these triggers so that it brings appetite to this type of market? Which is like this. Once it's over, it's done, one-to-one. There was a claim, there wasn't a claim. No, clear the page. Exactly, clean cut, perfect. So it's about addressing some of these challenges that we will need and beyond. The issue of the rate as well, because when we look at the guarantee market, the primary market, we see borrowers. Regarding scarcity, we talked about scarcity, supply, reinsurance, etc. Capacity for some names, not having very low rates sometimes, right? And when we look at ILS, it requires a return on the capital that is being allocated there. So there are some variables. Exactly that, right? And then you think, very good.
We suffer the money, isn't it? The company's debt.
That's right, exactly that. I think it's about balancing. There's the issue of collateral. So I think there are some challenges in between. You have no doubt you mitigate the risk there, so you disconnect it a bit from the debenture.
He is indeed the trigger.
Exactly, but you see, we're explaining to a guy who's looking at catastrophic risk. Usually there's a hurricane, it was windy, it wasn't windy, it rained, it didn't rain. We're explaining what the double trigger of the Brazilian judiciary is, and the guy doesn't even know where it is on the map, you know? It's something like this. I think these are challenges, but we are very optimistic about this market. I think
maybe it's distributed.
No doubt it's for other investors, private credit market. The market is already familiar with this type of risk. Perfectly. I think that's it. It's about knowing how to package it a little and balance it, but it's definitely a growth frontier that we are closely watching. I agree. And
sorry, were you perhaps going to say something?
No, not at all. I just wanted to say that you have a challenge there, right? Let's go.
I agree. We have also been looking at ALS as a good opportunity, both present and future. We have already delved deeply into this topic. I think what is missing now is finding a strong alignment with the product. What is the type of guarantee here? Or what are the features that have greater alignment within the ILS, the dynamics of the ILS, which is different from a traditional regular reinsurance capacity? So if you take a judicial guarantee, for example, that has a term of about 15 years. How are you going to address that?
It has to be a labor-related one.
Labor-related, a financial one, which has a well-defined start and end of term. I would highlight two other points. Super relevant here within the process of diversification and obtaining capacity. They are alternative insurance contract structures as well, where you don't just look at the protection of the contract money or the creation of a specific contract for a certain modality. So you analyze the insurer's portfolio as a whole, all the business lines of that insurer, and try to find a solution from alternative markets for the insurer as a whole, not only protecting it through the ED, but also bringing in more, attracting more capital from reinsurance markets, whether traditional or non-traditional. And we have also been focusing a lot on structures that are differentiated and not just thinking about the quotasha, the ED, or balance sheet issues exactly. And another point that is super relevant, which we take very seriously, is the analysis of data, its analytics. I think this ends up elevating the speech in any negotiation with the reinsurance market, where you can have 111 exactly, precisely, a greater detailing of the risk itself, the scenarios, the data, what you like, a lot of analysis of data. I think that within the broker within our obligation here to support our clients, in some way use the information provided by the insurers, translate them into opportunities for reinsurers, conveying this information in a clear manner, concise, transparent, and demonstrating to them the opportunities to compare with other situations where you don't have this type of information. I think this area of analytics within any operation is super important, and we have also taken it very seriously. So this ends up making the information much more qualified, and you can naturally attract more capital.
Excellent. Thank you once again for your participation, and stay with us for the next episode. Stephanie Fonseca, Deputy CEO at GE Carpenter. Stephanie Fonseca has been part of GE Carpenter since 2019 following the acquisition of JLT Rai, a company where she built a solid career started over 10 years ago. Her education is in economics from FGV and PUC Rio, and she has extensive experience in the financial market, mainly in the hedge funds and brokerage segments. Stephanie began her career in the reinsurance industry in the facultative branch, working for 2 years in the segment. In 2015, she moved to the contracts division of JLT Rai as an executive director, and later took on the role of head of guarantee and credit for Latin America, following the group's unification projection for the region in 2018. In 2019, she joined HiCarp as a senior vice president, and in 2021 was appointed managing director, a position she held until April 2024, overseeing the placement of all contract business, as well as the business intelligence, planes, broken support service, and marketing teams. Stephanie is part of the executive committee of Guy Carpenter in Latin America, and as a leader, she is constantly seeking innovation and efficiency in processes, while maintaining a strong and meritocratic culture within the team. She bases a culture of excellence in service delivery, along with a unique perspective on the reinsurance business, viewed as corporate finance. Currently, she holds the position of Deputy CEO at H&K Inter do Brasil. Fábio Scatigno. Fábio holds a degree in Business Administration and an executive MBA in Finance from Fundação Getúlio Vargas. Currently, as head of Surety at INRI, Fábio has had stints at Marcha OCS, now Orients and XP, completing 18 years of career in the sector. He also completed a specialization in Surety at the American institution NASBP. He was responsible for the new business team in Surety Insurance at Marcha and XP, achieving exponential growth in service excellence and productivity in these companies. He had experience as an expatriate in Mexico and Ecuador. When he was the risk and guarantees manager at OCS, he was responsible for infrastructure projects and risk management in those countries. During his time at XP, his most significant contribution was providing technical support to innovative projects and business development for large corporate companies. Currently, he focuses on consolidating the strategic positioning of this line of business, as well as expanding the client portfolio of the reinsurance economy.